Did you know that consumer confidence has plummeted to levels not seen in years, while the majority of people worldwide believe their countries are headed for a recession? But here's the terrifying truth. This isn't just any ordinary recession we're facing. Leading economists are warning that what's coming could be unlike anything we've experienced in modern history. Are you prepared for what they're calling a recession like no other? Welcome back to the channel. Today we're diving deep into one of the most alarming economic warnings of our time. While mainstream media focuses on daily market fluctuations, economic experts are sounding alarm bells about something far more serious. This isn't your typical recession prediction. We're talking about a potential economic downturn that could fundamentally reshape how we understand financial crisis, economic recovery, and market volatility. The warning signs are everywhere. Consumer confidence has dropped dramatically across major economies, reaching levels that signal deep uncertainty about the future. But what makes this situation unprecedented isn't just the numbers. It's the perfect storm of factors converging simultaneously. From supply chain disruptions to unprecedented government intervention, from digital transformation to geopolitical tensions, we're facing a unique combination of challenges that traditional economic models simply can't predict. Let's start with the hard facts. The current economic indicators are painting a picture that should concern everyone globally. Consumer confidence has fallen sharply across developed economies, signaling deep uncertainty among people about their financial future. But consumer confidence is just the tip of the iceberg. When we look at the broader economic landscape, we see troubling patterns emerging across multiple sectors. Interest rates remain elevated in most countries, making borrowing expensive for businesses and consumers alike. Investment in key sectors continues to decline, with many regions experiencing prolonged periods of reduced business spending. The unemployment picture, while stable on paper in some regions, masks underlying structural changes in the job market. Traditional employment patterns are shifting as automation accelerates and entire industries face disruption. This isn't just about job losses, it's about the fundamental transformation of work itself. Inflation, though varying by region, continues to erode purchasing power globally. When you combine this with stagnant wages in many sectors, families worldwide are feeling the squeeze. The real concern isn't just the current inflation rate, it's the expectation of future inflation that's driving consumer behavior and business decisions. Housing markets across the globe are showing signs of stress. High mortgage rates combined with supply shortages have created affordability crises in major cities worldwide. This isn't just affecting homebuyers, it's creating ripple effects throughout entire economies. Corporate debt levels have reached concerning heights in many countries. Many companies loaded up on cheap debt during the low interest rate environment of the past decade. Now, as those debts come due for refinancing at higher rates, we're seeing increased financial stress across corporations globally. So, what's making this potential recession different from previous economic downturns? The answer lies in the convergence of multiple unprecedented factors that have never occurred simultaneously in modern economic history. First, we're dealing with the aftermath of the most significant government intervention in economic history. The pandemic response involved trillions of dollars in stimulus worldwide, fundamentally altering money supply and market dynamics. Unlike previous recessions where government spending was limited, we're now dealing with the consequences of unprecedented fiscal policy across multiple economies. Second, the digital transformation has accelerated at an unprecedented pace. Remote work, e-commerce, and digital payments have fundamentally changed how our global economy operates. This digital shift isn't just changing business models, it's creating new vulnerabilities and dependencies that didn't exist in previous economic cycles. Third, supply chain disruptions have revealed how interconnected and fragile our global economy has become. Leading economists worldwide expect weaker global economic conditions ahead. The just-in-time manufacturing model that drove efficiency for decades has become a liability in an uncertain world. Fourth, geopolitical tensions are reaching levels not seen since the Cold War. Trade wars, sanctions, and political instability are creating economic uncertainty that goes beyond traditional market forces. These tensions are forcing companies to rethink global supply chains and creating new costs that ultimately get passed on to consumers. Fifth, demographic changes are creating long-term structural challenges. Aging populations in developed countries mean increased healthcare costs and social security obligations, while shrinking workforces create labor shortages and wage pressures. Sixth, climate change is creating new economic realities. Extreme weather events are becoming more frequent and costly, forcing businesses and governments to allocate resources to adaptation and mitigation efforts. The energy transition is creating both opportunities and challenges. While renewable energy investments are creating new jobs, they're also disrupting traditional energy sectors and creating new forms of economic uncertainty. Technological disruption is accelerating at an unprecedented pace. Artificial intelligence, automation, and other emerging technologies are not just changing how we work. They're threatening to eliminate entire categories of jobs while creating new ones that require different skills. Financial markets have become increasingly complex and interconnected. High-frequency trading, algorithmic trading, and complex financial instruments have created new forms of systemic risk that regulators are still trying to understand. Here's what makes this potential recession truly unprecedented. It's not just an economic downturn, it's a fundamental transformation of how our economy operates. Traditional recession recovery models assume that economic activity will eventually return to previous patterns. But what we're facing isn't a temporary disruption, it's a permanent shift. The expert consensus is becoming increasingly clear. The majority of economists rank a recession as the most likely scenario, with many major financial institutions now seeing significant probability that the global economy will enter a recession in the near future. But the real concern isn't just the probability, it's the potential severity and duration. Unlike previous recessions that were primarily driven by single factors, housing bubbles, oil shocks, or financial crises, this potential recession is being driven by multiple structural changes happening simultaneously. The recovery from this type of recession won't follow historical patterns. Traditional monetary and fiscal policy tools may be less effective because the underlying economic structure has fundamentally changed. Interest rate cuts may not stimulate investment if businesses are uncertain about future demand. Government spending may not create the same multiplier effects if the economy is undergoing structural transformation. The social and political implications are equally concerning. Economic uncertainty combined with technological disruption could create social tensions that further destabilize the economy. Political polarization could make it harder to implement effective policy responses. This isn't just about stock market volatility or temporary job losses. It's about the potential for a prolonged period of economic stagnation and social upheaval. The comparison to the Great Depression isn't hyperbole. It's a real possibility if current trends continue. Let's recap what we've learned about this recession like no other. The warning signs are clear. Plummeting consumer confidence, corporate debt stress, supply chain vulnerabilities, and geopolitical tensions are creating a perfect storm of economic uncertainty. What makes this potential recession unprecedented is the convergence of multiple structural changes: digital transformation, demographic shifts, climate change, technological disruption, and the aftermath of unprecedented government intervention. These factors are creating new forms of economic risk that traditional models can't predict or address. The implications for your financial future are significant. Traditional investment strategies may not work in this new economic environment. Diversification strategies need to account for new forms of risk. Career planning needs to consider technological disruption and changing skill requirements. The timeline matters. While some experts predict a deep global recession may start soon, the exact timing remains uncertain. What is certain is that the economic landscape is changing rapidly, and those who prepare now will be better positioned to weather the storm. Protection strategies need to be comprehensive. This isn't just about having an emergency fund. It's about developing multiple income streams, acquiring recession-proof skills, and building resilient financial portfolios that can withstand structural economic changes. The recovery from this recession will likely be different from previous recoveries. New industries will emerge, old ones will disappear, and the skills required for economic success will change. Those who can adapt to these changes will thrive, while those who cling to old economic models will struggle. Policy responses will need to be innovative and comprehensive. Traditional monetary and fiscal policy tools may not be sufficient to address the complex challenges we're facing. New approaches to economic policy, social support, and international cooperation will be required. The evidence is clear. We're facing the possibility of a recession unlike any in modern history, but knowledge is power, and understanding what's coming gives you the opportunity to prepare and protect yourself financially. What are your thoughts on this economic warning? Are you seeing signs of this recession like no other in your own community or industry? Drop a comment below and share your perspective. I read every single comment and love hearing from you. If you found this analysis valuable, make sure to hit that subscribe button and ring the notification bell. We're going to be covering this developing economic story closely, and you don't want to miss any updates. Before you go, I want you to check out our recent video on recession. Can you predict it? It's the perfect complement to today's discussion and will give you practical steps you can take right now to protect your wealth. You'll find the link in the description below. Remember, economic uncertainty doesn't have to mean financial disaster. With the right knowledge and preparation, you can not only survive this potential recession, but actually thrive during it. The key is staying informed, staying prepared, and taking action before it's too late. Thanks for watching, and I'll see you in the next video where we'll dive deeper into specific strategies for recession-proofing your finances. Stay safe, stay informed, and keep building your wealth.